You did lecture us on linear algebra, and I hope I can bring some of that thought into the speech. So I was saying to Yash, Paddy, that my preference is to actually just speak off the cuff. But given the sensitivity of the topic, I'm quite happy to go through the remarks in a very calculated manner. I hope I keep your attention though, even though it's a set of remarks. Prof, I'm equally happy to pause as Minister comes in. So I think the remarks are about 20 minutes long. Hello everyone, and I hope you warmed up this morning. So allow me please to start with a few prefacing thoughts. I wish to focus on financial technology or fintech and what we're beginning to refer to as FINTHREATs inside the South. These are threats emanating from the fintech domain that we have to stay abreast of. It is important though to perhaps begin by clarifying our perspective on what we mean by fintech. I'm sure if I put you on the spot and I ask a few of you, what do we mean by fintech, we'll get a few different responses. So after extensive work over the past year and a half, the South's view on the fintech phenomenon is that it can make a significant difference to the lives of South African citizens. However, fintech does pose certain challenges by introducing new forms of alternate financial services and business models, such as digital savings platforms, crypto assets, initial coin offerings, online peer-to-peer lending, peer-to-peer insurance, robo-advice, and alternative electronic and mobile payment platforms. As you can see, the list is quite a long one. Fintech is thus not a passing fad. Often I get that. People tell me, is this just a passing phase and life will go on? In fact, less concentrated, more competitive market structures composed of new fintech players may bring cheaper, faster, more convenient, on-demand, at your fingertips, real-time services. Think Libra. All of this is positive with the potential for deepening inclusion and bringing much-needed savings, payments, credit, insurance, and investment services to the masses. And as you know, in South Africa, there's still a big gap between those who have and those who don't have financial services. The major proposition of fintech proponents is that fintech will democratize financial services. Good morning, ladies and gentlemen. I titled these brief remarks, FINTHREAT, FEE-FI-FO-FUM. I smell the scent of digitization. Thank you for laughing. The reason for this is that while there is positive sentiment to embracing fintech, there will be new threats that emerge from this phenomenon. This will likely emerge as the result of the default use of exponential technologies such as AI, machine learning, cloud computing, and big data. In addition to that, we are not yet ready, as we've just heard from Sunil. In addition to that, we are not yet ready for the avalanche of new attacks, methods, tools, and techniques that fraudsters will use in order to manipulate the evolving and emerging system. In terms of the current systems, and I'm sure you're probably tired after an entire day of being bombarded by the data, okay, here's another one. 40,000 data breaches occurred in the financial and insurance companies last year. This is the 27,000% more than the remaining more than the remaining confirmed cases in other sectors. The main point is that financial services will be targeted. That's where the money is. And while technology may bring with it huge benefits, it will likely be exploited by those with nefarious intent. Something is changing though in the production of new fintech innovation and services. I would like to suggest three things that bring about a rapid change in the fintech threat landscape. The exploitation of these three factors in tandem contributes to these FINTHREATs. The first is the sheer volume, availability, and access to both structured and unstructured data. According to the mathematician and author Marcus de Sotoy, it is an extraordinary fact that 90% of the world's data has been created in the last 5 years. 1 exabyte, that's 10 to the power of 18, of data is created on the internet every day. I'm just going to pause there for a second. One of the profs that took us was Prof. Pillay, And I remember one day he said, "You bloody mathematicians, you don't understand the power of numbers." Just to give you a feel for that number, 10 to the power of 18. So like, "Prof, you know, we think we understand it." And he said, "Tell me, how many grains of sand do you think is in Africa?" It's measurable, it's quantifiable, right? Just to give you a feel, that was 10 to the power of 18, right? Eventually, after much dialogue, we concluded that it was approximately 10 to the power of 28. So you can just imagine what this amount of data is that we create on the internet every day. So it's the equivalent of the amount of data that can be stored on 250 million DVDs. Humankind now produces in 2 days, the same amount of data that it took us from the dawn of civilization until 2003 to generate. The second is the processing and capability of this data. Through tools, as you've heard, such as cloud computing, machine learning, and deep neural networks, large quantities of data can be mined and patterns never imagined before can emerge. What computers and related processes can do in days has taken humankind's generations to master. You don't believe me? Here's an extraordinary example of this processing and learning capability. Deep Blue, how many of you have heard of Deep Blue? Okay, there you go, plenty. Deep Blue, an IBM supercomputer, won its first game against world chess champion on the 10th of February 1996 when it defeated Garry Kasparov in the first game of a 6-match game, although Kasparov went on to win the match. After Deep Blue beat Kasparov, the belief was that it may be another 100 years before computers would be able to beat human beings at another board game called Go. How many of you know about Go? Okay, plenty. I had to learn it quite quickly as I was researching. So Go is an abstract strategy board game for 2 players in which the aim is to surround a larger total area of the board with 1 stones than the opponent. The game was invented in China more than 2,500 years ago, and is believed to be the oldest board game that has been continuously played to the present day. It is the only board game in which humans can defeat computers. That was true until 2016. AlphaGo, the brainchild of Demis Hassabis, another mathematician, a video game designer, was created to prove his Cambridge professor wrong. Sometimes we tend to try and do that, Prof. To prove his Cambridge professor wrong, that a computer could never play Go because of the game's creative and intuitive characteristics. Well, it did. In 2016, AlphaGo beat the leading Go player in the world, Lee Sedol. It was a 5-game match. Anyone wants to bet on what the score was? Okay? 5-0. It was 4-1. It's not so bad. Okay, 4-1. But what I'm not telling you is AlphaGo won. AlphaGo won. All right. The main point is that computers can learn much faster than humans. However, the tools and techniques used with machine learning are not immune to alteration and forgery. What makes FINTHREATs ominous is the speed, the scale, and the spread that nefarious activities may have. The third contributing factor that leads to FINTHREATs is the participants offering financial services. And as pointed out, the machines and mechanisms they use to offer such services are vastly different. Fintech firms may be small startups in financial services, but can quickly evolve to become tech giants within short time frames. Again, think Libra and Amazon Pay, etc. They leverage mobile devices, the internet, mobile communication networks, AI, cloud computing, machine learning, as the starting point to offer these services. This tech is baked in from the very beginning. All of this presents an exciting yet scary new financial services world that revels in the digitization, but equally brings concerns of the potential threats that may be lurking when these tools are used. Now let's turn attention to the possible threats. So what I'm going to do is, I've written quite a bit. I'm happy to make it available to you as well. I have a sense from yesterday to today and listening to some of the dialogues that many of these have been covered already. So rather than going through the same thing repetitively, what I'm going to do is maybe just pick 2 of the areas. I'll just give you a feel for the 5. It's not surprising, you've seen it in many of the slides, and then I'll just pick 2 areas that may possibly have not been covered to some extent, and I'll just cover that. I think what I'm going to do is pick perhaps blockchain. I know you've heard about cryptojacking and so on. I'm just going to pick blockchain. And I'm going to pick maybe the last one, mobile technologies, and then conclude. Is that okay? I've made the claim that these threats are different from anything we have seen in the past. The main hypothesis is that the reason for this is the rise of the Big Five. Five evolving and interweaving exponential technologies, namely AI and machine learning, blockchain, cloud computing, the Internet of Things, and mobile technologies. These Big Five techs are going to introduce new threats into the fintech domain, the domain of new alternative financial services. Let me touch on them briefly. So the one that I'm going to pick is blockchain. It's the second one. Let me go for it. So the use of blockchain in a variety of services will likely expand in the medium term. There is a claimed potential for further uses, extending from transactions to smart contracts and to the exchange of services and products. While the underlying technology is designed with security in mind, we heard that this morning, the other issues that should not be overlooked is the storage and use of private keys, the methodology for confirming the transaction, called consensus, and mechanisms for establishing and modifying how distributed systems actually obtain this consensus. Vulnerabilities can be drafted at the design and architectural level using the coding process as well as during the operation. Let me provide some examples of these vulnerabilities. Blockchain, of course, uses public and private key cryptography. With the right keys, hackers can access and manipulate the data. With regard to blockchain, keys and the possession of keys are critical, as hackers may aim to steal the keys in order to take advantage of the system. The weakest point may not lie in the blockchain technology itself, but rather in the personal computer or the mobile device of the user. If a computer or device is vulnerable to malware, it can also be susceptible to attack by blockchain hackers. If a key is viewed while typing it or stored in an unencrypted form, it can easily be stolen. This makes the job of the hacker much easier. Armed with several keys, several doors can be opened in the blockchain system. In March 2018, the Lightning Network experienced a distributed denial of service attack. The hacking group BitPico was able to connect to hundreds of nodes using automated tools. Nearly 200 nodes were taken offline, about 20% of the network. You can just imagine if that was the formal payment system and you're taking out 20% of the participants. Other attacks include Sybil attacks, where various identifiers are assigned to a single node, which then causes an interruption in the operation of the entire network. Similarly, in April 2018, criminals took control of the cryptocurrency platform Verge. Due to a coding bug, the vulnerability was exploited. On the 22nd of May, Verge was targeted once more, resulting in even valid transactions being rejected. In just a few hours, 35 million tokens worth 1.75 million were stolen. Now, a lot of you ask, when they talk to the SARB, they ask about smart contracting because we used it in Project Coca, etc. So let me turn attention to that very briefly. The re-entrancy problem is one of the top vulnerabilities found in smart contracts. It drains an account of its funds by running the same transaction many times. The processing of refunds supports this exploit, but can be changed at the design and coding stage. As you know, in the network, when a transaction is done, it's very hard to reverse it, right? It must be on the chain. This hack was carried out on a decentralized autonomous organization, a group, of course, that you're familiar with, that lobbied for people to vote on projects to invest in. DOA was a type of venture capital organization that would fund decentralized applications built on the Ethereum ecosystem. In June 2016, $50 million was stolen through a re-entrancy flaw. The exploitation of this function resulted in a third of the funds being drawn out. If you have a look at what's been built on the Ethereum platform in the last 2 years, you'll see that it replicates the financial system completely. You can do credit default swaps and multiple exchange transactions on that network. So vulnerabilities exist within blockchain networks. The above examples signal that if fintech firms build their processes on blockchains, they should be aware of some of these vulnerabilities, especially with smart contracts, especially if these are public chains that are utilized. I'll now very quickly conclude by turning attention to maybe mobile. So I would like to close off by turning to a device that in my view has been the innovation of the century: mobile devices and their related wallets and applications. These devices have brought with them tremendous capabilities to extend financial services to the masses at speed. One need only turn attention to the success stories of M-Pesa in Kenya, Unified Payments Interface in India, and the over 5,000 e-commerce and lending platforms in China. However, it is equally true that the threat landscape and perimeter has increased as a result of the introduction of mobile devices. No longer do I need to walk to my bank's branch or ATM. My network starts right where I am, through my mobile device and public Wi-Fi, of course. I think Sunil made those points excellently well. Some of the associated risks are the downloading of malicious apps that capture, for example, payment details that can be used to carry out fraudulent transactions, data breaches, a poor lack of encryption, and fake sites could all compromise the security of clients. Mobile devices and smartphones could also be compromised with malware that steals a user's credential when registering with a digital wallet app. Devices and apps can be compromised to reveal sensitive information through phishing attempts, social engineering, and the use of insecure Wi-Fi hotspots. You've heard that many, many times over the last 1.5 days. Last paragraph. Allow me then to conclude by reiterating that fintech must be embraced. Online peer-to-peer lending platform, crowdfunding, crypto, etc. Aligned with the World Bank and IMF Bali fintech agenda, the principles of proactively reviewing the opportunities, including a review of regulatory frameworks through innovation hubs and sandboxes, must continue. However, to ensure the integrity and stability of the financial system, as pointed out by Pradeep this morning, we must keep a close eye on this thing that we're now calling FinThreats. It is imperative that we better understand the threats that are emerging from exponential technologies such as cloud, AI, blockchain, etc. Aside from many mitigating measures that will be discussed during the summit today, one action that we must pursue is the sharing of information on FinThreats. We must do this domestically, you probably heard from Susan yesterday, regionally and internationally. The main point is that like threats covered by the DAO attack, or the ones we will see through the manipulation of machine learning processes, will not be like anything that we've seen before. We therefore need to actively and purposely collaborate, share and learn, and remain agile and responsive to this emerging new world. In response to the giant's FEE-FI-FO-FUM, we must be bravely ready to retort. FinThreats, throw what you can at us. We are prepared, alive, awake, and decidedly agile as a result of our intentional, collaborative resolve as regulators and market participants. With that, I thank you.